Hi everybody, this is Lara at pureelliottwave.com with the new, I'm going to update my analysis of OmiseGo OMG-USD today. I've just updated my data and this is my previous wave count. Let's start looking at it at the weekly chart level. I'm not really very happy with this ending or this leading expanding diagonal here. But I just can't see another way to label this that meets all Elliott wave rules for primary wave 1. If I could if I put this here, then the 1-3 trend line doesn't work. The wavelengths work, it meets all the rules. I just don't really like the look of it, but okay, I think I'll leave that. I know that there's huge volume on this. I've had a look at volume, it's in the billions, so it should have enough volume for decent looking Elliott wave structures. So the question is primary 2 over? Let's start out with just calculating the depth of it in relation to primary 1. Okay, primary 2 is a 94% correction of primary 1. That is certainly deep enough for it to possibly be over. It looks like it's subdivided as a double zigzag on the weekly chart with X and expanded flat. Nope, I'll put this down here. So it's possible it could be over. It's certainly within a normal range of 80 to 90% or even deeper of its first wave. That's a normal range for big second waves of cryptocurrencies. I think I might be missing some data from when I downloaded it last from Yahoo Finance. Doesn't matter because I'm looking at this and trying to analyse this in relation to this previous bull market. Let's have a look at the daily chart. How did I have this? I was considering that maybe primary 2 was over there, but clearly it wasn't. It might be over here. And the trend lines of the diagonal have a pretty good fit. Let's have a look at the structure of primary 2. And we'll focus in on the last zigzag and see if the C wave there could be over. No, sorry, not a single zigzag. Fits best as a double zigzag, doesn't it? And I'd have X as an expanded flat, W here. I don't know. Where do I have that over here? Oh yeah, I'm just not sure about where the B wave's going to end. I want to have it over there. This actually looks pretty good. Is possibly over. Looks like a nice looking 5-wave impulse. And this looks like a zigzag. I put A here and B. Maybe a combination. Or maybe a flat, a regular flat with A. Yeah, this has a good look. Avoiding any truncations and running flats. Well, C could be over. It could be a complete 5-wave impulse. What would we want to see to have confidence in that view? Let's first of all use a channel around primary wave 2. Well, I'm viewing this on a semi-log scale. I know it's a daily chart, but the exponential growth of these markets is so extreme. I think a semi-log scale is the best. Oh, that's a really nice looking channel. So a breach of this channel would add quite a lot of confidence in the view that primary 2 could be over. And I define a breach as a full daily candlestick above and not touching the trend line. What's the price point that's going to tell us that it could be over? I think it's this low down here. Or actually, let's be more conservative. Let's use this high. A new swing high above 2.847791, which is the start of minor wave C, would add confidence in the view that primary 2 could be over, because at that point minor wave C would have to be over, because if I move the degree of labelling here down 1, let me just real quick show you what I'm talking about. If I do this and then bring in this, so if this is an alternate idea, then you could have minute 1 over here My new 2 may not move beyond the start of 1 above 2.847791. So a new high above that point invalidates this idea and would add confidence in a trend change. So there's my confidence point, there's my channel. So let's have a look at some technical analysis for OmiseGo. Or before we do that, here's the invalidation point to the downsides. This is where the risk for this analysis lies. If it does continue lower, primary 2 may not move beyond the start of primary 1, so this is risk. It could go lower and it could get much closer to this invalidation point. A breach of this invalidation point tells me this analysis is wrong, and I would then have to readjust or find a new Elliott wave count. Weekly chart level, resistance 2.25, support at $1. There's more support below that from previous lows, and I'll just jump back to this, and I had a look at this. So there's support at 1.457, support below that at 0.337152, and support at just over $1.01. So there's pretty good support below at $1 and below that. Volume declining to the last low, so strongest volume on this downward week here with a bullish lower wick, followed by some sideways consolidation and then more downward movement. Price is falling essentially of its own weight. The last signal from on-balance volume at the weekly chart level was a bearish break below support. That could be resolved now by continuing downward movement. So the break below support happened in here. It was followed by downward movement, so the signal is now old. So no signal at this time at this low from on-balance volume. On-balance volume is making new lows with price, so there's no bullish divergence here. RSI is neutral, no bullish divergence here. It's in the lower half, it's getting closer to oversold, but it's not oversold at the weekly chart level. At the weekly chart level, ADX is indicating there's a downward trend in an early stage. Stochastics oversold, but when ADX indicates a trend, we use RSI, not stochastics. And ATR declining as price falls. There's weakness in downward movement, which is bullish, but then that does tend to happen as price falls, and it doesn't mean that there has to be a low in place. So this chart, overall bearish and not telling us that there's a low in place. Although I keep saying the lows for these cryptocurrencies are so much harder to identify than their highs. Sometimes it's weeks or even months after the low that you start to see enough strength and upward movement to have confidence that the next bull run is underway. At the low, they're really hard to identify. So what I'm trying to do here is just verging on impossible really, but hey, let's give it a go. The moving average situation is full bull bearish. The short is below the mid, which is below the long. They're all negatively sloped and price remains below all three, so that's a full ball bearish look. At this low here, there's a piercing pattern, so it's not the strongest bullish candlestick reversal pattern, but there is a bullish candlestick reversal pattern. It does not have support from volume though. At the lows, if you look back at price history of these, at the lows, if they do exhibit bullish candlestick patterns, they don't always have support from volume, and yet those previous lows where that happened have been sustained. So for this market, or for cryptocurrencies generally, if we don't see volume support for bullish patterns, I am a little bit concerned about that, but I'm not going to discard it based on that like I might for other markets. On-balance volume has failed at the daily chart level to make new lows with price. On a closing basis, the close here, on-balance volume failed to make corresponding lows. So there is weakness in this last downward piece of movement here. The last little signal from on-balance volume is bullish, but it's really weak because this little resistance line that's breached has only the minimum required 2 anchor points that you need to draw a line. It's short held, but it's horizontal, so it's a bullish signal, but it's really weak. The downward trend is extreme. It reached extreme here for this downward movement, and then some consolidation while ADX declines, and again ADX is indicating a downward trend, but it's extreme because it's again above both DX lines, but it's only at 30 and it can get a lot more extreme for these markets. So there is further room to go below for this trend. It could continue lower. ADX could get more extreme. RSI exhibits bullish divergence again on a closing basis. So I'm drawing the line here across the lows because it's more visually intuitive, but I'm making note of the closing of price before I identify any divergence, just so you know. So RSI is failing to make corresponding lows with price after reaching oversold. Now there's some bullish divergence. This could continue further. It could develop as double or even triple bullish divergence before a sustainable low is found. So on its own, this doesn't indicate that a low may be in place. It's a warning that a low could be in place. We're dealing with a balance of probabilities here, not certainties. Stochastics returning to neutral and ATR declining as price falls, and I'm adding in money flow index because it's like RSI but with volume added. So it's just to complement RSI, and this also shows bullish divergence after reaching oversold. And for money flow index, it's a little bit more obvious. So for OMG, it's possible there's a low in place, but I would want to see that confidence point breached and that channel on my daily Elliott wave chart breached to the upside before I really had confidence that there is a sustainable low in place for this one. Okay, that's all me. That's all from me today with an update, and I'll be giving you hopefully another couple of updates this week. I won't be giving you so much next week, sorry guys, because I have to travel from Mexico to New Zealand. It's a 3-day trip, so that's going to be a massive undertaking. I'll probably be pretty busy on planes and stuff. Okay, thank you all so much for watching, and thank you all so much for your support. I really do enjoy even the strange occasionally interactions on the YouTube channel, and I'm trying to be more active on Twitter, trying to post a chart a day over there, so you might want to go and look for my handle on Twitter. I'll put the link down in the description box below. If you're active on Twitter, then I'm also over there. Thanks so much for watching.